Hello everybody, this is Zach Ritchie with Fund&Grow. If you're new to the channel, you may have missed the credit monitoring video that we made a few months back. In that video, we talked about basically all things credit monitoring, but we also revealed that we now offer Fund&Grow credit services. This is our take on what we believe credit monitoring should be. Give the most information at the lowest cost and put no limit on how many times you can view your information. However, after we posted that video, we were flooded with questions about what information users have access to, what this all looks like, how to navigate it, and so I'm here to sit down with all of you and bring you on a tour through Fund&Grow credit services. So I'm going to break down everything for you and explain how you can use every bit of information available to you only through this service to monetize your credit score and get access to the best financing deals out there. So right here you can see main scores and reports section here. All three bureaus have their individual scores. Now, why is this important? Well, in a perfect world, banks would all join hands and all decide, hey, we're all gonna just pull one credit bureau for the next 5 years, and then everybody's life would be easier. However, that's not how it works. Instead, what you often find is that a bank will have its own biases and will look at certain elements to dictate why they want to go with certain bureaus at any given time. And those aren't necessarily apparent. So the best bet is you want to try to keep all three bureaus looking their best in order to give yourself the best opportunity to achieve what you want. Now, it's not always easy, and each score typically is going to run a little differently depending on what's reporting and how the bureau themselves are interpreting that information. But bottom line is you want to do your best to try to keep all three in good shape. There's also some score factors down here that showcase some very important elements like payment history, credit card use, derogatory marks. And a note about derogatory marks here, just because there's a couple of little dings here does not mean it's the end of the world. This is a situation where these could be very minor things. They could just be something that could be cleared up pretty easily, or could even be something that's getting cleared up on its own. For example, earlier this year, it was announced that the federal government is going through and releasing a new mandate that says that all paid medical collection debt on your credit is going to be dropped off automatically without you having to even dispute anything. And that's a huge percentage of people who use credit are held back by that exact measure. So the fact that it's just going to be cleaned up on its own is a huge benefit to you, and keeping your eye on your credit like this is a great way to stay on top of that. In addition to the bigger picture of your scores and lendability, this also goes into detail about each individual credit card that you may have. It also showcases loans and other forms of credit or debt that you may be carrying. So like you see here, we've got a huge variety of different accounts. And although this is helpful, it's not exactly the full picture. You can see things like here's a Chase card, here's a JCPenney store card, Ulta, Amazon, First National Bank of Omaha. These are all elements that are helpful, but they're not the full picture. And keep in mind, as many store cards as we have here, yes, they don't necessarily carry the same impact as a traditional credit card might, but it's also a great way to build up your credit and an excellent way to showcase responsibility, especially when you're first starting out. But let's dive into a little more detail about what some of these individual accounts may be holding for us. So this is the Chase card that was at the top of that previous list here. And whoo lordy, do we have a lot of information here. But here's a couple of things to really pay attention to. So first of all, responsibility level. This is an authorized user card, which means that this individual did not go to Chase directly and go open this card. This was a card that was either opened by a family member or a close friend of theirs, and they got essentially an additional user card and additional user access. So maybe they got their own copy of the card, they can spend on it. However, they are not chiefly responsible for paying off this card each month or making the monthly payment on this card. They're just responsible for spend. So this kind of account does not have the same level of impact that, say, a traditional just primary card might. But depending on the situation, depending on the bank, they may still consider this a big deal, especially if it's got, let's say, the highest limit of the whole report. Even if it's an authorized user account, it can still trick the computer system into thinking that's the absolute top tier that they need to try to match, even if this individual isn't quote unquote responsible for this card. Conversely, I've also had situations with clients who had authorized user accounts that happen to be carrying large balances. And when we applied and spoke with underwriting, a particular underwriter brought that up as a big problem. They said, well, this account right here is carrying a huge balance. I don't know if you're really qualified for new credit. I said, that's an authorized user account. So I'm not actually responsible for that debt. And the underwriter said, well, you know what? If it's on your credit report, you're responsible for it. So this is an exact reason why you want to stay vigilant about keeping an eye on your credit situation. Because if whoever is the primary user of this card starts running off to Vegas and blowing all the money on that, then that could ultimately affect this credit report, even if this person is not chiefly responsible for the account. So these are things you want to keep in mind when you're keeping a close eye on your credit. So starting right here, you see the opening date. This account was originally opened July 11th, 2017. So it's got a good amount of seasoning on it. That's wonderful. You can also see here that the monthly payment that is requested and required every month to keep it in the green is at least $35 each month. Wonderful. So in a perfect world, you would assume that if you paid this once a month, that this would reflect accordingly and everyone would be happy. But what if I told you that that's not always the case? Because although the opening date was the 11th, and you would guess, oh, well, probably the 11th of every month, it probably reports to the credit bureaus, or maybe it reports every day. No, no, no. Each bank only reflects once a month as a cost-cutting measure. So, with that in mind, the question becomes, well, what date is it that they actually showcase what I'm carrying on this account to the credit bureaus? Well, in most cases, and in most situations when you're looking at credit monitoring, you're never going to know. The monitoring service is not going to tell you. The bank is not going to tell you. They'll tell you when your due date is, and you may think, oh, well, that's probably the day they reported. Not always the case. So let's just say, for example, with this Chase card, it was open the 11th, and let's just say for the sake of argument that the due date each month is the 11th. Okay, great. So you think to yourself, all right, so I'm gonna make my minimum payment on the 11th, everybody should be happy. Well, the bank's not gonna yell at you because you technically did what they wanted. You made the payment before the 11th. But then you put your credit here and that payment hasn't reflected. Or maybe you paid the card off and it hasn't reflected. It's still showing a balance on there. And that balance is still hurting your credit score. And you go, well, wait a minute, I already paid this off. Why is it still reflecting this way? Because the due date for a minimum payment is not the same as a reflection date. And it is paramount that you find a credit monitoring service that will show you the difference in that information. And our service is one that does just that. So if you take a look here, we talked about opening date here is July 11th of 2017. Wonderful. Last activity on this account, June the 1st, 2022, which means that whenever this individual made their monthly payment of $35, even if they made it on the week before, let's say, or 2 weeks before, or maybe the due date is the 11th and they pay it on the 10th. Guess what? The last activity, the time that actually reflects, was the 1st. And very likely, it's probably the 1st of every month. And so if the due date is not that, if the due date happens to be the 11th, this individual could be making huge paydowns, but they're not reflecting in time. So this is a huge, huge thing to keep in mind, is when is the account actually reflecting versus when are you due to make your monthly payment. So by having this level of information, you're able to make more informed decisions on how you want to proceed with your credit. Or if you're one of these people that likes to pay off your credit card each month because you're like, hey, I don't want to deal with interest, that's fine. But if you knew the reflection date, then you would be much more in a position to where you can make the most out of your big payments. Because if you make this huge payment, pay off the whole credit card before the reflection date hits, then every single month is going to show you as this unbelievable star credit user, and your scores are going to go up, and your overall lendability is going to go up. This is a huge, huge thing to keep in mind that the banks are not going to come out and tell you. If you call your bank right now and go, when's the reflection date of my credit? They're going to go, I don't know what you're talking about. Because this is something that's done on the back end with the bureaus themselves. So, to recap, the banks do not report your daily balance to the credit bureaus. That would cost too much money and take up too much time. They pick one day each month to let the bureau know, hey, this is what this person's credit looks like right now. And if you know what that date is, then you are empowered and you can make a difference with how your credit looks each and every month. And so that is something paramount to monitoring your credit. In addition to the account details, we also have inquiries. You can see here's a couple of inquiries scattered throughout February, whatnot, June of last year, So these are all things to keep in mind as well. You want to try to keep your inquiries to a minimum, because the more inquiries you dump on your credit, the more it's going to hurt and affect your overall lendability. So, like I said, $15.95 a month allows you this level of information to really focus in on your credit, what it's looking like, what can be done to improve it, and when changes take place, whether it be pay downs, credit repair, what have you, you want to see in real time when your credit improves so that you've got the best opportunity and the most amount of leverage to get what you want from these banks. There's plenty of credit monitoring services out there. However, if you're already working with Fund&Grow and you want to continue the education, then Fund&Grow credit service may be the way to go. If you have any questions at all, feel free to give us a call, 800-996-0270, or you can always message us on the live chat feature. And so on behalf of everyone here at Fund&Grow, I'm Zach Ritchie. Hope this has been helpful and informative for you. I look forward to seeing you again soon. Bye-bye.